Hey everyone, welcome back to your weekly market outlook. This is for the 20th of May 2024. So let's just jump in quickly onto last week's fundamental. We have the release of the US inflation number, and overall we have a little bit of a softer inflation number, but it's still considerably high at this point in time. Take a look at the headline inflation number. It's a slight drop from 3.5% to 3.4%. Monthly growth drops a little bit from 0.4 to 0.3%. The core inflation number also fell off. Now with the core inflation, the drop off, it's pretty significant at this point in time. 3.8% to 3.6%, and the monthly core growth also dropped from 0.4% to 0.3%. So overall, if we take a look at the inflation number here, this is pretty much as per consensus. I don't think there's actually a huge surprise at this point in time. The only thing that kind of weakens the US dollar at this point in time is actually the retail sales. The retail sales was released together with the inflation numbers, and that was basically the main driving force. If you take a look at the numbers here, we have a little bit of a revision to the previous number, which was revised up to 0.6%. And then we have a 0% growth on the retail sales front. Now, obviously, that's basically what triggers the weaker US dollar. It does allow some of the major currencies to kind of recover. I think the global market is taking a little bit of a breather from that release there. A little bit of a weaker US dollar does goes a long way. A lot of the currencies are recovering globally, especially the Asian currencies. Most of them are recovering really quickly from last week's fundamentals. Now, if we take a look at the employment numbers coming up from the UK, UK unemployment does pick up a little bit. Claim count change, it's still good. It is below the consensus, but overall we saw a little bit of a gain as well. So minus 2.4 thousand to 8.9 thousand, still a little bit of an increase there. Australian unemployment rate, this one here picked up from 3.9 to 4.1%. But again, I think what happened with the US inflation number, that basically takes away everything else in the market, because with the softer inflation number, market is now back to pricing in for a rate cut to happen from the FOMC. And in addition to that, obviously the FOMC has already commented that they're not really looking at hiking interest rates at this point in time. All right, this week, what are we looking at? We are looking at Canadian inflation numbers. We're looking at RBNZ in terms of their rate statement, not expecting a rate change at this point in time. We are expecting the UK inflation number, and this is going to be the big driver for this week. Obviously, the UK numbers are going to be key. Take a look at the inflation number here. The expected drop was from 3.2 to 2.1%. And should we have that significant drop, that's a 1.1% drop that's expected in the market, that would pretty much confirm that the Bank of England is likely going to have their rate cut in the next 2 months. Obviously, the UK retail sales number is also going to come in play, and we are right now looking at a negative growth on the retail sales number coming up from the UK. Okay, so let's just jump in on the technicals. I do want to bring out the dollar index. At this point in time, the dollar index, we are looking at that pressure on the US dollar. It's borderline right now. We do have a little bit of a stronger support at 104, but once we transition below the Ishimoku cloud, that would be below 104.50 at this point in time. We're likely going to test at 104, and there's actually a higher probability that we could actually break below 104. What we're noticing here is that the momentum still points to the downside. However, if we doesn't drop quickly enough, it might not have enough momentum to drop even lower for the dollar index here. So what we are trying to say here is that 104 is going to be a key level. We might see prices dip down a little bit below 104. We might see a little bit of a move towards 103.50. But if it doesn't drop quickly enough, it might actually be trapped in a range bound market condition between 103.50 and then potentially testing 104.50, which is going to be the Ishimoku cloud again. That's basically going to be the expected range on the US dollar at this point in time. All right, moving on to the Aussie USD. Aussie USD, we have a major change of character. We actually broke above the March swing high on Aussie USD. So this is currently still on track for a push higher. We're currently looking at a projection towards 67.50 and potentially 68 cents on the Aussie USD. However, again with caution here, if the US dollar doesn't drop quickly enough, we might actually see a little bit of a pullback on the Aussie USD here. So we might actually be looking at a little bit of a pullback here. The range of the pullback itself right now, immediate support, we're looking at about 66.30 to 66.50. However, major support is going to be at 66 cents. Now, if we break below 66 cents, take a look at where the Ishimoku cloud is located. It's pretty far down below, and that's also where the support 2 is located. So, worst case scenario on the Aussie USD, if the US dollar gains, we might actually drop a little bit lower towards 65.50 level here for a support test. But again, what we're noticing, considering that we do have that change of character right now, we might actually be in a start of a new uptrend for the Aussie USD. This one here remains range bound. However, we do have that projection towards 67.50 and 68 cents at this point in time. Do note, depending on how the speed, the drop in the US dollar itself, that would be indicative of where the Aussie USD is going to be, right? If we don't have that significant drop for the dollar index there, we might actually see price on the Aussie USD gets a little bit of a pullback. That pullback, it's going to test the immediate support at 66 cents, and then below that, we're potentially looking at pullback towards 65.50. All right, next up is the EURUSD. EURUSD, we have also transitioned above the Ishimoku cloud, right? We are still within that 1.0850, 1.09 range. Obviously, we need to clear off 1.09. Now, if we do manage to clear off 1.09, then it opens up a pathway towards 1.1 on the EURUSD. Same situation applies here, same thing as with the Aussie USD. If the dollar index there recovers a little bit, we might actually see a little bit of a pullback on the EURUSD, potentially back towards 1.08, which is where the previous key level is. However, we have noted that this has transitioned above the Ichimoku cloud, so this could potentially be the start of a new uptrend for the EURUSD. Any pullbacks here, any failures at 1.09, we expect price to retrace back to 1.08. We are expecting 1.08 to be a stronger support for the EURUSD, where we might actually see buyers coming back into the market. So right now, obviously, there's going to be two scenarios. One, either it breaks above 1.09 and head towards 1.1, or it fails at 1.09 and we expect a little bit of a retracement back towards 1.08 before it can gain any momentum to drive this a little bit higher towards 1.1 on the EURUSD. Now, next up for the pound USD, this one here, we have transitioned above the Ichimoku cloud, but barely just transitioning above the Ichimoku cloud. Take a look at what price is currently being capped. It is currently being capped at 1.27. So if it fails to go beyond 1.2750, we anticipate that pullback, same thing like the Aussie USD and the Euro USD, back towards 1.26 on the pound USD. And depending on what we see there on the pound USD 1.26, if we see more buyers coming there, we might see demands coming there. Any bounces from 1.26, that would be indicative of the start for a new uptrend for the pound USD. However, keep in mind, we are expecting the UK retail sales number and we're expecting the UK inflation number this week. So if any of those comes in below the consensus, that could actually drag down the pound USD even lower. If that's the case, then we still have support pretty much at the previous order block, which is at 1.25, 1.2550 on the pound USD. All right, next is the dollar Japanese yen. The dollar Japanese yen right now is forming a symmetrical triangle. Now, with that in mind, if we take a look at the range there between pivots R1 and S1, we're expecting the dollar Japanese yen to be trapped within range between 154 to 157 this week on the dollar Japanese yen. We're expecting the range to get smaller. We're anticipating for the dollar Japanese yen to remain a little bit flat, hugging the pivot level pretty much at 155. Now, this is going to be important for the dollar Japanese yen. Should it break below 154, then we expect a deeper pullback towards 152 and potentially 151 on the dollar Japanese yen. That will still be above the Ichimoku cloud though. However, any break above 157, then we expect a little bit of a rally to the upside. It's still going to be capped by 160. However, the situation here is that this is a symmetrical triangle, so we're looking at a little bit of a neutral stance on the dollar Japanese yen. Now gold is up next. Gold just broken through a bullish flag here, and this is now an all-time high for gold. It basically just posted an all-time high last Friday, and for now we're expecting this to test 2,450, and potentially, if we take a look at the projections here, we still have enough momentum for gold to continue to push towards 2,500. Support wise, right now we're looking at 2,350 and 2,300. Those two are going to be a critical support level for gold this week. Now lastly, we have oil. For oil, there are several interesting observations that we can note here. Number one, it never closed below the swing low in March on 11th of March at 76.77. That's for oil, right? And if we take a look at that push lower on oil the past month, right? Throughout basically the whole month of May, there was pressure to the downside for oil. None of them has actually closed below 78 cents. So technically, 78 cent support level still holds for oil at this point in time. Now, if we take a look at the current price level, this is currently back at 80. Now 80 is very important because the range between 80 and 83 is going to be a threshold for oil. That's going to be the toughest level for oil to get through. If it manages to get through above 83, then yes, it can push a lot higher for oil at this point in time. However, failure at 80, that would confirm a retest of the Ichimoku cloud itself, and a rejection from 80, then we could actually see another push lower back towards 78. However, again, to note here, going with the commodities, we saw that recovery on gold. We should expect that spillover to come in for oil as well. But again, really dependent on whether or not it could actually surpass that 83 level. So between 80 to 83, that's basically a no trade zone for oil. That's going to be a very dangerous place for you to actually start having a position on oil at this point in time. Right now, we are testing 80. Seems like it's a good recovery. Seems like it's a good bounce from 78. However, we're not ruling out any potential of a rejection at 80, and rejection from 80 that would actually see price fall back down towards 78, and it closed below 78. That opens up the pathway towards $75 on XTI. Okay, so just keep that in mind for oil. All right, so with that, good luck with your trades this week, and I'll see you soon.